Local market with Stan Shamu over at IG in Melbourne. Stan, first of all, we risk sold off overnight along with the US dollar. What was largely behind that? Was it that disappointing data in the United States, both on the services front and private jobs?
Yeah, absolutely. We continue to see these sort of disjointed moves in the risk space and in some of the more defensive space as well. I mean, of course, we're not used to seeing the US dollar and US equities move in the same direction, but that's exactly what we saw last night. Those ADP non-farm employment change numbers and the non-manufacturing PMIs, they really set the tone for US equities, and we saw a massive slump there. They pulled back from those record levels quite sharply. At the same time, of course, we have to consider the fact that today is a big day on the macroeconomic front, and therefore some investors were always likely to start paring back on positions ahead of what could be a significant day for financial markets. Of course, locally we kick off with those building approvals numbers and retail sales this morning. We're expecting to see some improvement, but not on the retail sales front. We're only expecting a 0.3% gain. I think it was up 0.6% last month, and as a result, we'll probably see the Aussie dollar continue to remain a little bit steady as we search for further leads. But should this data come in significantly ahead of expectations, then we'll probably see a bit of strength in the local currency. Of course, we came within striking distance of that 105 level overnight, and we've pulled back into that 1046 region. So any strong beats on the economic data front could see us mount another challenge back towards that level. But we really cannot ignore the fact that we're hearing contradictory comments from different Fed members on the US dollar front. Of course, economic data is suggesting that the recovery is perhaps still very fragile, but we hear some Fed members coming out and saying they're expecting our QE to be coming to an end as early as this summer. This just doesn't seem very feasible, considering the fact that the recovery hasn't quite sustained itself well enough to survive without help from the Fed. We've heard already Fed Chief Ben Bernanke reinforce the fact that he's still quite happy to keep QE going until a certain point where the employment market has shown that it's resilient enough to hold steady by itself and not need quite as much help from the Fed.
Yeah, I think you were referring then to San Francisco Fed Reserve President Josh Williams's comments out this morning following some more yesterday from other Fed members. But what's significant in these latest ones from Williams is that he's talking about summer as opposed to the end of the year. That's pretty interesting. And he says that eventually, if we find ourselves picking up too much speed, we may need to apply the brakes. Now, the data points over there have been getting more and more positive. Perhaps ignore what we got overnight. You don't see this as a chance, a pullback over summer in the Northern Hemisphere?
It still looks pretty difficult to see that happening, and of course we have to look at what Fed Chief Ben Bernanke said recently, and of course I think it was Janet Yellen who also came out and reinforced what Bernanke was saying. So it certainly seems like there's a lot of miscommunication over there, or maybe they're just passing through their own opinions to the market. But I don't think the US economy is quite in the state to be able to sustain itself without QE just yet. They'll really need to make sure that this is a sustainable recovery. And of course, we can't ignore that they have to sort of substitute for the fact that there's a lot of fiscal difficulties over there at the moment with different political situations affecting the economy. So with that in mind, it's really hard to see QE come to an abrupt end without an improvement on the political front as well.
An abrupt end. He's saying that they'll start paring it back over the summer. But interesting to point out, I mean, 6.5, that's the threshold we've been given by the central bank over in the US as to when we can perhaps expect quantitative easing to start easing back. We don't necessarily have to hit that 6.5 mark, but see it coming. And I guess most don't expect that to happen during the summer. So is that why you think it sounds a little crazy to start pulling it back?
Yeah, absolutely, absolutely. That's exactly how it seems at the moment. But yeah, no, I mean, we just have to continue looking at how these economic data prints develop going forward. Of course, this doesn't set us up very well for the non-farm payrolls print on Friday, and that will definitely have a lot of doubters talking about this vast improvement that we were now starting to forecast in the jobs market.
Okay, Stan, thank you very much. Appreciate your time.
Cheers, Kate.
Moving to the political front now, and the Prime Minister will step up her Asian Century agenda today when